Good afternoon. My name is Kevin Prey, Customer Risk Manager with Ardent Mills, and this is the October 13th edition of the Inside Scoop Market Review. We at Ardent Mills are proud to unveil the Inside Scoop as a brief and insightful review of scheduled USDA reports with relevant cash market updates. Our goal to help you, our customers, distill a wide array of information, manage commodity risks, and most importantly, support your business goals. It's been a busy 2 weeks in agriculture as the USDA released 3 important and widely followed reports to the grain markets. 2 weeks ago, on September 30th, the USDA released its estimates for September 1st, 2014, grain stocks in all positions and its final estimate for small grain production for the 2014-15 marketing year. The small grains report included acreage production and yield estimates for wheat, barley, rye, and the like, and it is critical starting point for analysts to build out forward-looking wheat supply and demand tables. Both of these reports on the 30th largely came in as expected. The USDA stocks in all positions came in very close to trade expectations with good stock increases in wheat to 1.914 billion bushels, larger increases in the SEP1 corn stocks to 1.2 billion bushels, and a reduction in soybean SEP1 bean stocks to a record low 92 million bushels to start the 2014-15 marketing year. The USDA's small grain report watched closely for its final production estimates of the 2014-15 U.S. wheat crop, also came in right at trade expectations at 2.035 billion bushels. However, there were noticeable adjustments across the wheat classes. Both of the major hard wheat classes, winter and spring, saw production increases versus estimates, while soft and white wheat classes saw reductions. The USDA's small grains report relies on producer survey information as of September 18th, and due to the late spring wheat harvest, the USDA may revise final U.S. spring wheat production in its November WASDE report. All other U.S. wheat, hard, winter, white, and soft wheat production numbers are final for 2014 and 15. On Friday, October 10th, the USDA compiled its stocks and small grains production data to update its monthly World Supply and Demand Estimate, or WASDE report. We've recapped the U.S. domestic supply and demand tables for your review. The acreage, yield, and final production data has been incorporated from the USDA's small grain report released on September 30th. U.S. production grew moderately from September's report to 2.035 billion bushels. However, this is the lowest crop we've produced domestically in the last couple of years. 2015 ending stocks were reduced to 654 million bushels, or a 30% stocks-to-use ratio, not burdensome by historical standards for the U.S. market. Usage was adjusted moderately higher through increased wheat feeding and exports, 25 million bushels each, resulting in a reduction in the 2015 ending stocks versus its September WASDE estimates. However, both feed and export demand are significantly lower year over year. As we review the USDA WASDE report by class, we specifically call out lower soft red winter, hard red winter, and white wheat production totals year over year, offset by a significant increase in hard red spring wheat in the 2014-15 year. Durum wheat production is largely unchanged. However, quality concerns around color have limited supply of high-quality U.S. durum for 2014-2015. Significant demand shifts away from hard red winter wheat to hard red spring wheat due to price advantages and availability are also noted for your reference, as the end user has followed the market pricing signals to move more hard red spring into their rations versus hard red winter year to date. As you already know, this year's hard red winter wheat crop saw its output cut by the droughts in Kansas and Oklahoma regions, although hard red winter wheat proteins are significantly higher year over year. Lower exports for soft red winter wheat has reduced demand, and even with a 20% lower production in 2014-15, projected ending stocks climb higher, up 40% year over year to 162 million bushels. White and durum wheat ending stocks are uncomfortably tight heading into the next marketing year, and recent market pricing on both of these wheat classes have confirmed the USDA's report. Of particular note in this report, and frankly a surprise to the grain trade, the USDA reduced the 2014-15 ending global wheat stocks by 3.8 million metric tons. Year-end wheat supplies remain adequate at 192 million metric tons, or 26% stocks to use. Global wheat feeding and export trade offsets USDA's production increases. These changes in the global S&D have provided some recent psychological support and seem to have halted the wheat market's freefall over the last 60 days. The U.S. corn yield felt some love in the October WASDE report, with yields increasing to a record 174 bushels per acre and a total U.S. production of 14.475 billion bushels, a record for the U.S. Both production numbers were right on trade estimates. However, a reduction in planted acres coupled with increased feed demand leave corn's 2014-2015 ending stock estimates at 2.081 billion bushels, slightly below estimates and only a nominal increase from September's 2.0 billion bushel print. Yield reports from the country remain strong, and the old adage of big crops get bigger seem to be firmly the trend. But we'll need further confirmation and harvest progress to see any numbers bumped higher by the USDA. Soybean yields at 47.1 bushels per acre are 7% higher than last year, and coupled with such a large year-over-year increase in acreage, production is estimated at a whopping 3.927 billion bushels, and 2014-2015 ending stocks climbed to 450 million bushels. After the recent SEP1 stocks print of 92 million bushels of beans, 450 million seems a lot more comfortable and should eventually be reflected in market values and structure. After all this, now what? U.S. wheat production has come in as expected, with total supplies largely in balance with demand. Ending stocks-to-use ratio of nearly 30% is comfortable, and we've seen futures market values readjust lower over the last 6 months to reflect a more comfortable wheat S&D in the U.S. and the world. Significant production and quality differences across U.S. wheat classes are the production story of note. Decreases were seen in hard and soft red winter and white wheat classes, increases in spring wheat production, and durum quality concerns all will drive the trade activity for the balance of the marketing year. The October WASDE does point to moderate increases for global wheat demand, primarily in wheat feeding and export trade, and seems to have put a floor in the wheat market, at least temporarily. Wheat futures values are up approximately 30 cents from recent pre-report lows and are trying to find a trading base across all markets. The U.S. farmer has not participated much in ownership transfer. This fact, combined with logistical concerns surrounding the huge U.S. grain harvest, has supported wheat basis levels across all classes in all positions. Corn and soybean production and yields are at near records, but in line with expectations. Harvest progress will dictate market direction over the near term and determine how quickly we realize these large crops. Risk takes many forms: flat price, components, logistics, and quality. Stay in touch with your Ardent Mills representative to make sure you optimize your situation in order to maximize your profits. On behalf of the entire Ardent Mills team, thank you for your business. We look forward to speaking in the future.